Welcome to the market update, into the close. This is Jade Bronco. It's about 7 minutes before the last hour of trading begins. Monday, March 2nd, 2020. We've had an exciting week. This last week, you can see that the broad market has pulled back. Somewhere from 340 down to 300. That is, 10 to 15%. This is the S&P 500, by the way. That's the benchmark. 10 to 15% drop. There's a couple of questions that are not being asked, or I'm not hearing the answers to. So the questions aren't being asked, and the answers are not being proffered. I want to put this kind of in the laps of the listener right now. If you are a trader and you trade in the market, or you're just somebody that is interested in making money, what is your knee-jerk reaction? What's the first thing you do when you hear, hey, there's a potential pandemic, there's a potential virus that can kill a lot of people pretty quickly? For most of my students, they're thinking that's an opportunity. For people of means, it's an opportunity. Business people are going to move their money, traders are going to move their money from one from one equities class to another equities class according to where they think they can get the best gains. This drop of 10 to 15% is thoroughly unjustified. The news is going nuts with the coronavirus, and President called it a hoax. I don't know if it is or it isn't, but here's what you're going to hear. I'm going to show you what really is. What you hear from other resources is hantavirus, coronavirus. That's why the market is dropping. But the fact of the matter is, if it were just as simple as a virus, chicken flu, swine flu, SARS, Sarbanes-Oxley, kidding, it sounds like it ought to be one, but there would be tons of money flooding into biotechs so that they can solve the money. And whoever bets on the right biotech that gets the antivirus figured out, that's where money comes in. That's big money. That's where investors are looking. Whoever manufactures gear that allows you to or prevents you from getting the disease, there's money in that. So that's like your 3M, or maybe even Clorox, or some consumer goods that sell little hand lotion things. That's where basic reason and rationality would go if there were a what's the word I'm looking for? If there were a real virus, if the virus was the problem. But that is not the problem. So with this in perspective, a drop of about 10 to 15%, let's find out a little bit more about why that might have happened. Here's some detail that I'm bringing in from John J. Murphy's website called StockCharts.com. This is not with his permission, but I'm not going to say anything bad about it because I actually use it. It's a fantastic resource. This is a comparison of all of the sectors: discretionary, communications, technology, industrials, etc. There's 12 of them here. Last count. It is these, actually specifically by symbol, it's each of these symbols that comprise the S&P 500. And they perform, these are all at present running against the baseline. What's the baseline? The baseline is, notice down here, S&P 500 baseline. So essentially, how are each of the components of the S&P 500 faring against the S&P 500? Which ones are bringing it up? Which ones are pulling it down? There's also a question of capitalization. How much of the SPY is energy? How much is it? How much of it is communications? How much of it is? There's a minimum amount of approximately 8% in each case, but that's up to the manager of the S&P 500 or Standard & Poor's to determine. So, big green line here is since 2008, going crazy. Gotta love REITs. That's real estate. It's the thing that brought the economy back from 2008 lows. Some 800% increase in 10, 11 years, in a decade. That dropped off of the 800%, it dropped 100% last week. That is the greatest percent decrease of all the positions in the SPY. The communications, let me underline, real estate was the first one. Communications, they're color-coded. Also doing marvelous things since 2008, but they're not half as strong as real estate. The bottom line here is that if an illness were going to go through the country very quickly, is the knee-jerk reaction of every investor to go liquidate their portfolio of REITs. Sky is falling, sell the houses. It's nonsense, absolute nonsense. Why is that one the hardest hit compared to the others? There's another theory. I don't think I'm going to have time to get to it. But coronavirus does not equal sell your houses and all of your interest in real estate. It doesn't say cancel your Verizon subscription and other communication devices. What we had until today was everything here was going down. That is a mass market sell-off. Everything dropped. So it's basically we've got a general drop on a unique situation. The facts are that this is not tied in any way, shape, or form to healthcare. See this orange line here? That's healthcare. That's healthcare right there. I'll highlight it for you. It's gotten up 100% since 2008. It's up 100%, which is nothing compared to. And as a matter of fact, take a look at this. Can you see how it is actually going down? Do you see that right there? Here's the line. It is going down in the last 3 weeks when it should be doing the opposite. Money should be surging into it for the opportunity to cure. So let me finish up with what it's not. It's nothing to do with the hantavirus or any other illness. It's everything to do with somebody not being very pleased with the entire market that has enough money to move the market across the whole spectrum here. Nobody was spared. Nobody was spared. And the only tool that you have to verify where it's going to go is Fibonacci retracements. I showed this at the blog over the weekend. I'm going to run this easy numbers here: 240, 340, halfway in between. It's got to be what? Where's my line? Halfway between those two. 240 has to put 50 on top of 240. It puts you up 290. There's half. Here's the good news. If you missed this breakout, of the ascending triangle. The good news is it's back to 50% and it's bouncing. This is not a reversal, nothing like it. It's a retracement. Reversals have patterns. I've been asked, is this 2008 all over again? The answer is no. And the proof is this. 2008 was at 67. The high here, 339. Market is expanded in a multiplier of 5 during that time frame. What preceded the drop down to 2008, 2009 when it's time to panic? A very obvious and simple double top that was confirmed or retouched there and continued downward. There are patterns. They take time. That one took a month to occur. This one, which is a triple bottom that was near the same lows as what was experienced in 2009. Back in 2002, triple bottom reversal said go long. Double top on the uptrend said go short or get out or hedge. And with this bottom, we've got an inverse head and shoulders breaking out at 100, pulls back, retouches, and away it goes. Learn to read these patterns so that you're not thrown into a dither about what's happening. Those are patterns. Here's the pattern from last week. It's called nothing. It's not a reversal. This is called a retracement. And there's a night and day difference between a retracement and a reversal. And that night and day difference is about a month of testing, retesting, and proving out price points. Is it going to bounce? Yes, I said that Friday. Yes, I said that over the weekend. Yes, it happened today. All I can say is stay tuned so you can get the real deal, get the real scoop on what's happening with the market. Most of my focus has been on making money with options, but the broad market will have an impact on that. Here's focus. Ready for focus? Focus looks like this. It looks like last week, focus. Spreads, 9 trades in 48 hours for 11%. Reach out to me. Jump onto the jbronco.com website, put your name, phone number, email address. I'll get back to you. So you're not left in the lurch. It kills me that there are those that are misinformed, driven to panic at this point over something that is very playable, and there is good news, which is it's going to come back up. It's going to keep going back up. We've had this retracement 3 times. So got way too much to say here and way too little time to do it, but I just wanted to give you a brief overview of how to read what's happening in the market without listening to the baloney. Again, reach out, join us at join.me/JadeBronco at right about nowish. That's all I got to say. I'm going to jump into trading here and cut this recording and see it into the close.